Hey, good morning, folks. It's Dean here, your passive income coach with another crypto trading update in the Bitcoin market. And for those that haven't seen any of the previous videos, I'm just going to give you a bit of a recap of where we've came over 2018 and then really drill down into what I expect to see happen over the next few days. This is a follow-on from my video last week on Tuesday, where we looked in right into this area over here. And what happened and what actually played out was one of the scenarios and how we would have traded that for some really good profit. So look, this is a big picture view. So we've zoomed out. We're looking down at Bitcoin. This is our all-time high back on the 17th of December. Where we're going through this incredible euphoria phase of going from $8,000 on the 24th of November, all the way up to over $17,000, $18,000, $19,000, in the space of a couple of days. This is called a euphoria phase, and anytime after that, obviously is a big decline. So we've been in this sort of bear market. Okay, you can see here that we've been in this downward massive decline, which ended on the 6th of February. Okay, so that's basically our downtrend, and from there, we've started to turn around. So a couple of things that you could sort of do to pinpoint that. So we could run a trend line sort of down through here. All right. You can see how we've sort of bounced off that. We've stayed below that all the way down to here. And then, early February, we sort of crossed over that. This period here is actually not an uptrend at this view, at the one-day view. This is actually what we call a consolidation phase. So we're actually still consolidating on the big picture, but we can draw down into this and do make money, buying on basically support and resistance levels or small breaks of inter-time period time slots. All right, and these are some of the things that we run on our trading course on how you can make money during these sort of sideways days. All right, so since the 6th of Feb, what have we done? We tried to make a new run up and create a new bull market, but we certainly weren't ready for that, because after every long bull run and then after every bear market, we do have to have these consolidation phases. So this is really where people get cleaned out. Okay, so people that have been bought in this time period here, are really struggling because the market's down here, and they're really, and they're just hoping, right? Hoping's not trading. They're just hoping that it'll eventually go back. All right. So they see this coming back and they go, yeah, oh my God, I'm going to get my money back. Excellent. All right. And then it doesn't. All right. And they see it go back down again, and they're all depressed and, doom and gloom. And it starts to come back up, and it starts to come back down, and it starts to come back up. So in this period here, all the people that bought over this period that are holding on for dear life and just bought crypto because, it was the buzzword of the time, these are the people that are starting to sell. These are the people that are like consolidating their losses, getting out, don't want to be in the Bitcoin market. Bitcoin's a scam. I've got to get out. All right. And all they're doing basically is just locking in a loss. All right. So this is where your selling's coming in, is basically people flooding the market to get out of the euphoria phase from 6 months ago. All right. And eventually what will happen is, all the people that think they're, traders that aren't, they're just buying stuff, will eventually sell all their Bitcoin, and all the smart people that are buying it in around here, okay, eventually all the sellers will die off, okay, and then we'll have more people coming into the market. It'll be new blood, younger people coming in, want to get into crypto for the first time, all that sort of stuff, and we create a new cycle. All right. Now, I believe that we've actually started a new cycle. Now we're at the very early days of it, okay, and we have a look at why we're in a new cycle. Again, on the crypto course that we run, and then what are the phases of the different cycles that we run through. But suffice to say, we went through up here. Some people that had lost money over here had sold out. All right, the price went back up. Everybody that thought they missed out because the price was down here finally got out. And this is what we call a double top. All right, it's a sign of weakness. All right, we can trade that to make money on the downside, and eventually we've hit this base. Now, this base here at $6,500 is effectively our new cycle bottom. I don't expect prices to be below $6,500, certainly not for the rest of this year, and possibly never, ever again. All right, this is the low. If you bought in this time period, well done. But remember, not about trying to pick highs and lows. We're just simply trying to pick the direction of the market and trade with the market. So we've come into this new phase. I believe the new phase started on the 1st of April. That was the last bottom that we've had. And since then, we've slowly been going back up. So that's our overall view. Okay, and then from there we go down to the next level. So our overall view at the moment is what I call accumulation or consolidation. All right. Even though this says upwards, until we actually break through the 11,700 mark US here. All right, and you can see that this was support. This has been massive resistance over a long period of time now. We need to break through that before we're in an actual defined bull run. Okay, so at the moment we're just bouncing between this line, and that's called consolidation. So let's zoom in a little bit. Okay, we take a 4-hourly view. All right, if we take the 4-hour view, let's go into a full screen. Okay, so this is where we've started to make our run up back in early April. All right, we've been slowly making our run up. You can see here from this trend line, we've been above this trend line for quite some period of time. All right, and then we hit this high again at 9,800, which was just a short-term high. We've had a bit of a decline. You can see right around here, we've talked about in a number of lessons now, this support and resistance stuff. So you can see this playing out again. A lot of resistance through here that we broke through. All right, but we had this massive run up for like 6 time candles. Okay, that's always going to collapse back down. All right, if you get 6 time candles in one direction in a row. All right, we saw that massive decline back down to support and resistance, and we pretty much held that line. We had a few little days below it, but we never retraced below this 50% level. What's this 50% level? Again, we cover this on our trading course. This is again our Fibonacci retracement support and resistance level, and you can see pretty much we held that. We never closed really below that line. Once we broke through it, we came back to it. We come back to it. So between these two lines is a lot of buying opportunity. Now, if you've been watching my videos over the last few weeks, you would have known that we went into this, what we call a wedge pattern. All right, you can see it quite clearly. We're starting to wedge in. And this is the video that I did probably on or around Monday or Tuesday last week, about a week ago. All right, and I said, one of 3 things is possibly going to happen. We're either going to break to the upside out of this wedge. No matter what happens, we've got to break out of the wedge, right? You can see that triangle is about to complete. And we could potentially have stayed above this blue trend line, all right, which would have been a very, very good, strong sign, all right? And I wouldn't have expected the market to go up relatively quickly out of that. Or we could break to the bottom. And 2 things were going to happen if we broke to the bottom. 1, we would once again hold this line, right? Or 2, we would break through it, and then this support level would eventually become resistance, which would be a massive sign of weakness and would not hold well for the Bitcoin market. All right, we would have seen a significant drop all the way back down to 7,000, possibly even back down to the 6,500. But what happened is obviously we held above it. You can see once again we did not close below our 8,900 support level. We even closed above our 50% scan retracement line. Okay, all of that leads to a really good sign of buyers coming back into the market. All right, and then we've shot off since then. So what's happened? We've now broken through this particular trend line. So this trend line is now no longer needed. We've broken across it, so we're no longer in this downward sort of stage. So let's get rid of that off the chart, and we can get rid of that smaller one as well. So we're now still. This is based on our trend line from what I believe to be our current cycle low, that's 6,500 back on the 1st of April. This is our trend line up. All right, and you can see that we were below it for a little while, but we're now breaking up above it. Okay, again, very good sign of strength. We're going to see a lot of activity around this line. Okay, and here we are moving into this. This is the forecast that I put in about 2 weeks ago that I expected to come into this point, and then we're going to see a little bit of retracement. I still expect that to happen. So let's just have a look a bit about here. So the information I've so far shared on our Facebook community is really all about support and resistance, and ideally that's all you need to be able to trade with. And I only shared more analysis, everything for the people that do our trading course. But from a support and resistance level, you can see here, this was the high out of this little run. Now, if we extend this particular line, all right, you can see, look at that. It's immediately created. This was a resistance line. We broke it through pretty quickly, and it's now acting as support. Okay, again, that's a good, strong. Well, it's not a strong sign at the moment, but it's a sign that in the short term, remember, we're only looking at a 4-hour chart now, all right, that in the short term, okay, we are going to see some more new highs. Okay, so we've seen that break across. Now I expect over the next, couple of hours that we could see potentially some more highs into here. And then what I would expect is potentially, and this is where we can look out for, some moves back down into this blue zone. Okay, where'd this blue zone come from? Well, let's have a bit of a look. All right, if we run off from here, from this particular base, all right, and we're in at this period here, all right, let's see it goes all the way up to here. At the moment, we're at this point. All right, you can see here again that 50%, that 61.8%, that Gann Fibonacci retracement levels sort of indicates that this is where potentially the market could go. What we don't have yet is obviously the high, okay? So we really need to have that high be confirmed. Once we know what that is, we can lock in our retracement level, and this will give us an indication of where potentially this blue marker could go, right? And we would expect retracements into around this period. This will be a buying opportunity, but we need to confirm where that high is. So that's still potentially hours or days away before we have that high. Okay, so again, we should particularly see some buying time in here, potentially some buying time in here, and then we make our next move. That's really what we want to do on a support and resistance sort of level. Let's even go in one time frame more. Let's really zoom in to 1 hour chart. Let's see what's happening on a smaller basis. All right. Let's go this way. All right, so you can see here again, we've bounced above, that particular long-term trend line. This is why we work from the outside in. We want to start high, we want to zoom right in. So we know that is a strong trend line. We're holding above it. We're now breaking into, this particular area. Excuse me. All right. Once that high is confirmed, we will expect a retracement. Okay. So I don't know where this is going to happen. Might happen over here. Might happen over here. All right. The key is that after every push, there'll be a retracement. Okay. So this is our current push now, based on an hourly chart. So this could happen for the next 1, 2, 3, 4 hours. Okay. And then we will expect a bit of a decline. Okay. And this is where we start charting out those support and resistance levels for our buying opportunities. Okay. And we buy off that and then sell at the next resistance point. So what could you do to make a little bit of money? I find the 4-hour chart a little bit easier to use. All right. Now is not the time to be buying. Okay, what you want to be looking for now is ideally, all right, if you had been listening to the video from Tuesday, this would have been the time to buy. All right, this was, if you remember, this is where we had our wedge. Okay, we had our wedge sort of, we had our wedge come, trend line, there we go. We had our wedge coming in here. All right, this was from the other day. Oh, what happened to that line? I don't have much luck with the charting today. Okay, so this was the line from the other day. All right, we said, look, if it breaks to the downside, look for support around here. So if you're watching the chart, okay, then this would have been the time to be buying. All right, you would have a purchase in here and you buy. Every time it comes down to $8,900, you'd be buying with a stop loss below the 50. Now, a stop loss is something, again, we cover on the course. It covers your risk. You know how much you're going to be at stake. You don't want to be in an open position because we don't always get it right. Okay, so we would have our stop loss in here just below the 50. All right, and we would have bought in this period here. Now, if you just simply held until the high of that, okay, because that was the previous resistance that we were working off, all right, you would have done fairly well out of getting it from here, all right, and then selling it when you hit that high. All right, that's a 7 point, let's call it an 8% return, okay, well, let's get rid of that. Let's draw it up accurately. All right, if you had been buying here, great. Even if you had missed this one, right, and you saw that it come down, it didn't go below 50 and then come back up, all right, you could have potentially bought again at the $8,900. If you still wasn't sure, you could have waited until we went above that particular high. That's really waiting for confirmation that we've come into this green pattern. That's where we opened, that's where we closed. So you could have potentially bought, okay, when we went above that. If you were still waiting for massive confirmation, you could have waited for the to move above that particular high. All right, so either way, there was at least 4 or 5 opportunities in here to be able to buy. Okay, and if you had a bought in here, let's say you had a bought on this day and you waited for confirmation that it wasn't going to go back below the 50, you had a bought there and then you sold. All right, you've made a 6% return in 2 days. Okay, which is a great little return, and you'd be now out of the market as one option you would have sold. All right, second option would be that you You hold your position, but you now move your stop loss. It was down here. Move your stop loss up to here. Okay. And in fact, given today's information of where we are now, I would actually have stop losses now at about the 9,550 mark. Okay. So the market's actually got to retrace back down to 9,550. You could even make it right on the support line if you wanted to. All right. 9,600. Okay. And you're following the market up. This is what we call trade management. Again, it's a subject that we cover on the trading course. All right. We manage your trade. All right. Because you could have closed out here and you'd be out of the market. Go and take your 6% return and look for a next opportunity. If you're out of the market, we don't have a next opportunity yet. We're now looking for it. If you would still be in the market, you've managed your trade, you've moved your stop loss up to now cover to make sure that you still make your 6% return, but you're in the market gaining profit. If this continues to move up, right, and then comes back down, which it will, all right, and then holds above that and then continues to move up again, remember, you're still in the market and you could be adding to your position, slightly into the future with any future market movement. But right now, if you're still in the market, you want to have your stop losses around about that $9,600 US to get yourself out of the market should the market turn against you. Obviously, we won't know what's going to happen over the next few hours. The battle between the buyers and the sellers will continue today. But I do expect, over the next day or so that we will see this move up a little bit, and then I will expect a decline for a couple of candles, and that will promote our next buying opportunity. Whether or not it's going to look like something like this, okay, which will come down to the support level, that'd be fantastic, okay, or it's going to look something like this, we'll soon see. Look, I hope that was useful. It's going to be a very interesting weekend. I think there's going to be plenty of buying opportunities as we move into this new phase. As I said, we are, just recapping, we are in, I believe, our next accumulation phase. All right, so we are now in our next accumulation or consolidation phase. There is plenty of opportunity to be making money between this line here and this line here as we sort of bounce and make our way eventually back up to $12,000 US. Plenty of opportunity to get in, get out, get in, get out, get in, get out, get in, get out, making 5, 6, 10% every couple of days as we make our way up to this. If you're a long-term holder and you're just simply hodling coin, all right, and you just simply, enjoy the frustrations of watching your value go down and then come back up with the euphoria and then go back down, all right, be aware that we certainly haven't got a defined trend in either direction at this stage. We are certainly in what we call a sideways market between $12,000 and $6,000, but plenty of opportunity to make money. If you'd like to know more, look, make a comment down below, and we can certainly have a look at that. And I can give you some more information about how to get involved on the trading course. I teach you the basics to learn how to trade, how to read a chart, and get into the technical analysis side into the technical analysis side of trading. And you can use that skill in any market. It's not just crypto related. Okay, I cut my teeth on gold, silver, and commodities, and the same information applies. So if you're interested in learning a little bit more about the course, leave me a note below. I'll get you involved in our crypto Facebook community where we provide the information, we provide the training, and we also look at charts and some other cryptocurrencies and certainly altcoin. So I hope that's been of use. Leave a comment below. Take care. Have a fantastic weekend, folks. And let's see Bitcoin make its slow journey back up towards $12,000. I think we're in for an exciting year in 2018. All indications are that we are now turning around and going back into a bull market. So it's going to be a fantastic year. All right, folks, take care. And I'll look forward to bringing you an update in a couple of days' time.